how to master market sentiment data for low risks and high reward setups. I've selected a few pairs like pound dollar, euro dollar, Aussie dollar, and the Kiwi dollar. So that's the New Zealand against the US dollar. We're going to be having a look at soon. But, you know, there's a lot of things have been happening. I've been away for the last couple of days, Monday and Tuesday. So sorry for that. We didn't have the webinar yesterday. But we're going to go through, I'm going to try to go over as well the economic calendar as usually we do on Tuesdays, just to refresh everyone's mind, because that's, you know, it is somewhat of an important week. We're going to have the ECB tomorrow. Highly expected to have no changes into the interest rates. But next week we're going to have the Australian CPI as well. So the consumer price index, that's really, really important. I would say it's one of the most important, one of the most important data for the RBA to take a decision on what are they going to pause again or what are they going to cut. And of course, they're basing on not only the CPI, but in a vast, sort of data, and that includes unemployment, for instance, that we saw the release last week. It was a really, really bad unemployment data. It was expected to be at 4.1 and it came up to 4.3%. That levels haven't been seen since 2023, 2022. That was when COVID was a thing, so it's just showcasing how weak and how bad, in a sense, the economy of Australia is. And there's a few economists and a few analysts talking about, RBA have lost the time to cut rates, or is RBA, not knowing what they're doing, etc. So there's a lot of divided, I would say 50-50 comments around the industry at the moment. My honest opinion is that we can't judge, because I don't have the knowledge as someone, well, at least that person that is there, this case, Michelle Bullock, that is the chairman for the RBA, the chairwoman for the RBA. She, well, at least she should have the knowledge to be doing that sort of, and backed by a team that should even have more knowledge than her and different ways of thinking, to be able to actually take advantage of how the operations they can do based on the market, okay, and make that a better opportunity for the society. Anyways, so today is Wednesday, as I've just said, and we're going to be looking at the market sentiment data. I'm going to be trying to get some good low risks and high reward setups as we did last week. The last couple weeks, last week and the week before that has been giving us some really good trades. The market has shifted somewhat. So since Monday, I've seen that we had some sort of shift into the market, in a sense of we were trading somewhat of a risk off, and now we're trading risk on again. And what that means is I'm just using the US dollar to gauge my my opinion, basically. Okay, so we've seen the US dollar going up, and then everyone sort of thought, even myself, even I included, I thought that we would probably go higher, and ended up going lower. So we're going to have a look on that as well. Perfect. The link is on the chat. So once you click that link, you're going to get to this page. So you can come into tools, and then you go into economic calendar. And I'm just going to select all and just go into this week. And then I like to leave the low ones out. So I don't like to select those ones. And I only select medium and high. So on Monday, we didn't have anything. We only had China long prime rate and New Zealand inflation rate that we can clearly see it's pretty good in terms of declining. Remembering that this is quarter over quarter. So if we put, let's say, 3 years, the last 3 years on a line chart, we can see that it's one of the lowest points that has been. Okay, so previous to that, the lowest point was into July next year. So last year, 1 year ago, was at 0.4%, and now he's at 0.5%. So that's pretty good, pretty stable in a sense. Compared to the last 5 years, we can see that in 2021 all the way to 2023 even, we had inflation high as 1.8, 2.2, and that was the new normal on that scenario, okay? And we can clearly see that the market impact was pretty bearish, of course, for the New Zealand dollar as inflation is lowering down. There's market is trying to pacify that the cuts are going to happen sooner than later, and therefore, if cuts happen sooner than later, then the yielding of that currency won't be the same as other currencies around the basket, so Australian dollar, US dollar. Oh well. Australia, USA, Europe, UK, and etc. So, investors quickly relocate the capital to other high yielding paying currencies. So, and that's clearly we can see that it lost a lot of traction and now is trading somewhere around the same level where it were previously when that release was on. Okay. Cool. So that was one thing. Yesterday we had the RBA meeting minutes, and we can see that the RBA. Oh, sorry, we can see that the RBA. We can see that the Australian dollar had somewhat of a. Let me just go back to a 50-minute chart, and that was around 11:30 a.m. into Australia. So let me just put that. Oops, sorry. So let me just put that into Sydney time. There you go. So 11:30 a.m. on yesterday was somewhere around here. So not too big of a move, okay. But afterwards we can see that the Australian dollar has been pretty strong, and the reason for that is that in the last meeting that we had the that we had the pause. Lots of those members are still expecting no cuts further. So Australia is RBA is in a sense pretty unsure of what could be the potential path for the Australian economy. And that being said, in a sense it's bullish because the RBA won't cut soon as everyone is expecting. Because in the beginning of this year, in 2025, we had such a thing that RBA would cut, that many rates and blah, 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 but ended up cutting only once or twice this year and nothing more, okay? And there's still people and economists and analysts expecting another 2 to 3 cuts this year. I've made very clear if the RBA cuts, we are lucky. So that's already something that we having on the line that we did cut, and that's pretty good. I don't think it's going to have another 2 cuts. Maybe on one more on maximum one. I would say maximum one, but that's the bare minimum. So I can't see RBA having another 2 cuts or even 3 cuts that some people are expecting. Okay, that's just my personal opinion. So market is just classifying that in a sense for bullishness into the Australian dollar. Then today is Wednesday. We had we haven't had anything big, but tomorrow is going to be pretty awesome for Europe because we're going to have the Euro area ECB interest rates decision. So the European Central Bank is expected to keep the rates unchanged at 2.15%, as previously, so basically no changes into the rate. Do I think it's possible? 110% it's possible, okay? They're probably not going to do any sense of cuts. Most likely, they will keep holding that for until inflation fell down further. It's already, okay, so if we look to Europe inflation, it's already into the 2 to 3% target. Okay, it's at 0%, up from 1.9% in May. So the annual inflation is on the ECB target, because the ECB target is between 2% to 3%. ECB inflation target. Let me just check that again. Yeah, it's the symmetric inflation target is 2% for the euro area. Okay, so it's already targeted, but what I think it will happen is the one that lower, okay, the one that lower for the rates to go lower. What I think that a lot of people are not in, not of a lot of people are not observing is that there's a very minor swift and switch. Let's say there's a very minor switch. If we look for euro US dollar, for instance, we can I can make that better for everyone. So this trade didn't go through. That's all right. So there's a let's go for daily, even better. Since the beginning of this year, we were trading down at 90, pretty much 90, 98 cents, 99 cents, okay? So we were trading at 103, 102, 101.5, around those levels. And then we see this huge move up from there all the way now. We're trading at 1.17300 and with the highs at 1.18, around 1.18, okay? So the ECB started to cut as the Fed still is holding. But even like that, the euro is still having huge flow. What's the actual thing that is happening here? It's pretty simple. Investors are looking for safe places to put their capital. And when we look to Europe, for instance, is it's not the best, but it's one of the best choices that have. Because let's look at a very simple way to explain this. Where there is the lowest inflation, Europe and Switzerland. These are the only two places we got like inflation at target. Okay. USA, high inflation. Australia, high inflation. New Zealand, high inflation. Canada, high inflation. UK, high inflation. Japan, now, on a positive way, it's on a high inflation, but it's positive. So everywhere around the globe still have a very high inflation, where the central bank will cut. And if investors buy the rates at a higher price, there's no sense for them to do that. But they will be paying an excess of premium, such a big price that they won't even have profits. Okay, so that's the reason why they keep allocating the into euro, and they keep selling US dollar, Canadian dollar, gold, and etc. All right. So that's pretty much what has been happening around the economic calendar. And then on Friday, we're just going to have the retail sales from UK, and that's pretty much about it. Now, let's get what matters the most, the trades. Hopefully, I've did a sort of a quick overview that you guys could, get the head around. So go to tools. So come to FinLogic, same link that I've sent you in the chat. And go to tools, and then go into market sentiment. So you click in there, you're going to access this. So it takes a while to load sometimes. Let me see if there is anyone new here, because I haven't checked. Just a second. No one. But that's good. Everyone knows what's going on then. Cool. So as I say, I've separated a few specific pairs for us to have a look at. Specifically, pound against the US dollar, euro against the US dollar, Australian dollar against the US dollar, and New Zealand against the US dollar. I know all of the currencies are against the US dollar, but it's for a good reason, because I do expect, let's just go and have a look into the chart. I do expect the US dollar index to continue to drop from now. That was the whole expectations before, when we had, the call last week. And since then, we've touched on that sort of resistance area, and I say if we break these, then we look into highs. Okay, but no, we didn't. So we've touched on that resistance area, and we slowly coming back down. Of course, the first imminent target would be around 96,300. That's for sure the first one, 96,300. Okay, that would be the first one, or even 96,500 actually. Yeah, that would be somewhere around these levels of 96,500, 96,300. I think most likely what could potentially happen is a continuation down into the US dollar. So I'm pretty bearish on US dollar at the moment and bullish into other currencies as the risk has shifted to risk on. And we can clearly see that into gold, for instance, that has been going sideways for quite a while. Okay, so gold hasn't moved anywhere since April. Wow, it's a long time. So hasn't moved anywhere since April. It's just literally going sideways from 3,440 to down to 3,240. So it's that $220 just up and down, up and down. Okay. So that's the reason why I've got pretty bullish into the pound, into euro, and into Aussie, and into New Zealand. And if we come here, we can clearly see that the FinLogic sentiment tool is giving us a buy signal into Australian dollar, giving us a buy signal into euro dollar, giving us a strong buy signal above 10% into the GBPUSD. And where is New Zealand dollar? Oh, there you go. Okay, it just changed. Okay, so New Zealand dollar is sell. So that makes my sort of trading not a. I wouldn't take that short just because I don't believe that the New Zealand dollar is weak. Okay, I would prefer to take longs, as we can clearly see. But it's fine if you would like to. As I say, this tool updates every 15 minutes. So sometimes that can happen. You know, I've prepared that the webinar at 3:30 and now it's 1 hour after, and we can clearly see that that was a big switch from one side to another in less than an hour. But let's work with what we got, and let's just start with the pound dollar. So I'm just going to go pound dollar. Perfect. So there's a few things here. We've had this huge move up here, over here, from 23rd of June all the way up to 1st of July. So that was like around 10 days, pretty much. And that move, if we count from the week to week, that was like a 3.12% move. And then after that, in a few days, from the 1st of July down to 17th of July, so 16 days, we had that whole move back down. You know, one thing interesting that I would like to note is, and I've mentioned about that last week, and there's a box here, and for those who have been following me for a while, know that one of my targeting strategies is that I like to target those boxes, at least the 50% of them. Okay, so whenever there is a box, like for instance, so let me just find another one so you guys can have a look at it, like this one. The market always tends to come back to that box. It doesn't matter if it's bearish or bullish, all right? Like there's another one here. Market came back at least to the 50%. Yeah, there's plenty of them. Like you can check that later on your own, but if you just find consolidations, market tends to go away and then push back. It's like a magnetic sort of zone, and it's pretty interesting how that works. But it's just that sort of thing that you need to be looking at. Those little patterns can show you a lot of things. So my expectations for the pound dollar here is a comeback around, because we just broke this downtrend, and then we need to, in a sense, retest that. So the best area, in my opinion, would be around 1.34600 to 1.34700. Okay, so around this area here, if the market gives us an opportunity again to push back down to this place, with stop losses just below these lows, and we can put the take profit, because usually what it happens is when there is a break, what it tries to do is target at the top of that trend line. So that's a really great opportunity for a mid sort of risk reward trade. That's not the highest, because the highest we can do better, and I'm going to show you in a few seconds. But that's a pretty decent one. Of course, it's going to be like a swing trade idea. All right, it's nothing to do like tomorrow or next week. Probably will take some time, maybe 2 weeks to 3 weeks. But like, look at that. You have 316 pips profit to 73 pips stop loss. So that's fantastic. Okay, so that's really great. So that gives you an RR of 1. If you're risking $100, you're getting back $430 gross. Of course, then you have the net, you have the commission, and you have the swaps that most likely we're going to be charged, because we're going to be staying there for more than 1 day, more than 24 hours. So that's a swing trade. But from that $430, most likely what you're going to get is $400. So the risk is pretty decent. Okay, so it's nearly a 1 to 4, and it's awesome. Okay, so my opinion is long on GBPUSD, and as we can see on FinLogix, right here is a strong buy, and it's above 10%. Okay, so that's the most important thing. If that was below 10%, maybe I wouldn't catch it. We're going to have an update in literally 35 seconds, but let's keep moving. What I will do is try to I'm going to just take a photo with my phone so we can compare later. Perfect. And you guys can see that it's going to actually change into in live. Okay. So 10 seconds. So just pay attention on that. And most likely like 5 seconds, 2 seconds. There you go. It's changing. Then that's it. So it changed it a few, added a new one, as you can see in the bottom. I think we got like 3 or 4 new ones. So previously the biggest changes were the GBP Japanese yen, that previously was 2% and now it's 3%. Then we got a few more into neutral. So before that, we didn't have New Zealand dollar, Euro Japanese yen into neutral, and now Euro Japanese yen is into neutral. New Zealand dollar against the US dollar still the same, and GBP AUD, yeah. US dollar CAD, yeah. So US dollar CAD now is added into the list that wasn't before, and it's on a very strong sell. And we can see there's only 1% of the whole market looking to short that. So recommend to have a look into it. Okay. Cool. What else? I think you guys got that part already. I think someone sent me a question. Sweet says, hi Luca, didn't see you yesterday, to the vein. Yes, it's all good here, mate. I just got some I would say health issues in the last days, but I'm all good at the moment. Okay, and I'm back to it. Cool. So getting back here, next one, let's go into the chart and have a look into that. Perfect. I know it's very similar to the pound dollar because they're like brothers in a sense. But very nice trade here for those who've seen my 4 entry strategies. Okay, one of the things that I would like to mention is there's a different, there's a difference between, because a strategy is, it's a combined of, it's a combination, actually, not a combine. It's a combination of thinking, data, and statistic in a sense, and taking advantage of something. So that's one of the strategies. Okay, that's what strategy defines in a sense for myself. So in Forex, what I like to do in any sort of market, what I like to do is I have my strategy, and on top of that, I only have two things: direction and entry criteria. That's all it gets. That's all it takes. Okay. And then on inside of direction, so think of like that. Okay. So let me grab my pen. Let's put that in white. So let's say you have your strategy on top, and then you only get two things. You get the entry criteria and you get the direction. Okay. So direction, entry criteria. And then on the entry criteria, you may have like 4 different strategies, or maybe even more. I don't know. And then on the direction, you only have 2, up or down. Okay. Up or down. That's it. And then over here, you may have like Fibonacci, you may have moving averages, you may have support and resistance, order blocks, whatever. So S for strategy, D for direction, and then I think the arrows down and up, I think it's pretty obvious. And the EC for entry criteria. Okay. I think that's what it is, and that's what it takes to say that, okay, I have a strategy. All right. And that's pretty simple when you think. If the direction is up, I'm going to look to longs. If the direction is down, I'm going to look to shorts. And how you define the direction? Through market analysis, to fundamental, because not the technicals. The technicals will be very hard to give you the direction. Okay. Anyways, so just exemplifying here, we had a pretty, I know it's easy to talk about like charts, but that was a pretty simple, we knew that euro-dollar would continue to go up due to the fact that inflation is still high into US. They don't know if they're going to cut or not. They're very lost on what they're going to do. So that shows a lot of uncertainty and a lot of lost. They don't even know where they are. And it's just positive for Europe because, Europe has been with low inflation. ECB will continue to monitor and most likely will cut faster than the Fed. And they're having a positive cash flow with other countries. So that's awesome. Euro bullish, US dollar bearish. What are we going to do? Long euro dollar. So now we go to the entry criteria, Fibonacci from the lowest lows to the highest highs. Wait for a pullback into 61, 70, 50%. Stop losses below 80. Take profit is about above the highest point, and you got the trade. Okay, cool. So as I say, we look into long. So same thing, as we can see here, we have this trend line that is somewhat getting broke. We haven't had the retest yet, but we have over here some sort of support from here to the top. There you go. It would be awesome, like literally would be the best scenario if we could have like that price coming back down here, and then we catch the train up above again to 1.18400. I don't think it will, to be honest, because we can see there's a lot of momentum and a lot of velocity onto the bullishness price, but the best option if not down there, we can actually have two trades then. We can separate the risk. It would be around these levels of 1.17. Okay, so just grab the, oh, there you go, over here. Okay, so somewhere around these levels. So that's where I think that's the most reliable level to get in. Let's say that's the top. 61% would be down here. 31% would be above here. So what we could do is we can simply place a pending position at the 38 of the Fibonacci. Doesn't have to be perfect, but for those who, there you go. So long position placed over the 38 with stop losses below the 50. And then the take profits would be above that 1.18 off over here. So that gives us nearly a 1 to 4. There you go. And then the second position would be if we actually get down to 61 and we know that the market's probably going up. So have a pending order over there. Stop losses most well placed would be below the 100, and the take profit would be at the same level of where the other one is. So that's not like the best risk reward. As I say, I like to divide the risks into a more of a high risk and medium risk. Because so in that sense, what we're doing here is we're giving less room for the market to move because that's only 38 pips off stop loss. As of this one is 87 pips off stop loss. Okay. The take profit of this one is less than this guy, but the stop loss is bigger for this guy. So for this sense, what I'm aiming for this one is if that gets broken and it just sort of touches down here, goes opposite direction and reaches 61%, then what we can expect is that the market to continue to go higher from there. If the market breaks these lows, then that's it. Maybe we're looking for a reversal trade then. And we have to just take the losses and move it on. Okay? So I think that's clear. Next one is Aussie dollar. So let's have a look at the Aussie against the US dollar. We have 25% only on the long positions. So that's pretty good. So Aussie against the US dollar would be my second favorite trade after, second. So that's after euro dollar. So let's have a look into that. There we go. Perfecto. So Aussie dollar, we've been with this guy for quite a while, and it's been a bit of a headache because if we simply looked at it, it hasn't moved much. Okay, it's been ranging on that area, and actually a little bit even more, like somewhere here, a little bit more down as well here. So it's a bit of a difficult one, but still pretty decent because, as I say last time, Australian dollar is one of the best ones when the risk is on, because Australian dollar is the risk on currency. So investors will fly to it whenever there's a change on risk. Okay, so if we were risk off, as we were, and then we change to risk on, Australian dollar will be one of the really huge impacted currency. Okay, so let's go for the 1 hour chart. And we can see that we are literally in the middle of the range, and there is a possibility of us, oh wow, that gives me dizziness. Wow, that's not good. Let me take this off. That's like a strange way of, because I'm zooming out and that sort of goes the opposite way. A little bit of nausea, I would say. Anyways, now when we look here, we're very close to the top. So I don't want to be looking to buy on the top, right? Unless we have a strategy of breakout strategy. That's not what we're looking to now. This strategy is a trend following, okay? Or at least we try to capture the trend in the very first instance, and then we go from there. So there's two ways we can trade this scenario. We can either wait for that market to come back around these levels for the support, previously resistance. And then we have a tighter stop loss that we're not going to be looking to buy much on the top. So we still have a room. But pay attention to what I'm going to say now. If the market continues to go higher, reaches that top, and then comes down and triggers the order, that's invalid. Okay? Because then we're going to be looking at more sellers pressure than long pressure, than buyer pressure. Okay? So what I want to, I would say, would be better to see is the market coming back down to this area before going up. And then we get the order, and then we have the market up. Okay. Ideally, that move up would break the 66. Okay, 66 have been there for quite a while and could have been break since July. Since start of this month, since July, since the start of this month. So, it has been on this range between 65 and 65, 900, so 100 pips range. But there's a very high probability of that breaking up higher. I'm aiming 68, okay? Not short term, more like a long term until end of the year, but there's definitely a possibility of us having that into the next quarter, I would say. So ideally, what I would like to see is a pushback down at 65,500 or 65,400, and then a push up. If we get a push up and then down, that's invalid. Okay? So the trades would be somewhere around this, would look like somewhere around this. Stop losses below this low. And as I say, the take profits would be above 66. So what we can do is 66,500 as the next psychological number. Okay. Usually another target we can do, that would be like more of a risk target. That would be more like a risk trade, as I've mentioned. So the safest trade would be down here. Okay, so that's where I would literally prefer to long, and that would be somewhere around here. Okay, that then my stop losses would be below this wick, just literally below this wick here, around 64, 450, and then my take profits would be exactly the double of this consolidation. So if that consolidation gets break up, that's where my stop loss, my take profits would be 67. Okay, so that gives a little bit of more risk reward in a sense. And gives a 50 pips stop loss with 206 pips take profit. As of this one gives 110 pips take profit and a 43 pips stop loss. Okay, so that's pretty good, pretty decent. I think I really like this trades. So let's just go over everything again, and we can have a look into it. So as I say, we're heavily short on US dollar and we're long Australian dollar, euro, and the pound. Okay, so let's go to pound dollar. Pound dollar, I only have one idea, because if the market comes back to these lows, then it's already breaking the lows of the previous low. And then that's like, it's reversing. Okay, so that's the reason why we only got one trade idea into the pound. And another thing is that there is no other chance for us to get involved into this trade if not into these levels. So expecting the pound to continue to drive up, but before that we need a pullback. Okay, pullback around 1.34700, and then a move up to 1.38. Okay, for euro dollar. Eurodollar, we already have a little bit more flexibility. We have two options here for those who want to trade. The first one is a more risky but higher reward. So 3.9, so 147 pips take profit, 37 to 38 pips is stop loss. As of the other one is like a medium risk to 198 pips is take profit, and 87 pips stop loss. Okay, that's pretty decent. Pretty good, I would say. Both trades very awesome. Okay, so basically what we want to catch here is the pullback down around this support area and on the 38. Stop losses would be below the 50. If we get stopped out, we already have an order on the 61 that is on another support area. And then the stop losses would be below these lows, because if those lows get broke, then I don't want to trade on longs anymore, because that's the lowest point it ever been. And we already broke the top. So that would be like a change of character. Okay. Then we got the Aussie against the US dollar. And that one I've just explained it. But mainly what I want to see is a push back down from where the price is. I don't want to see the price moving all the way up and then pushing back down and then, sort of entering the market, because what I want to see is sellers pushing the price down for the same sellers buying into a cheaper price and making that a strong move up. Okay, there's no big catalyst on the market at the moment to have a break above that area. So just that's it. If the market goes up, reach the 66, it's invalid. And I wouldn't be looking to long that anymore. So if we got stopped out on the first trade, then we get the second trade, higher risk reward. Basically what we want is then, what we expect is then the market to break above the 66. And my target is exactly the consolidation, but above. Okay, cool. That being said, does anyone have any questions? No questions? Okay, we have one. Let me check. Yes. Okay, Sweets. Sweets have a question. Let's see. Oh, and of course, guys, always check the FinLogic sentiment tool. It's really, really important that you check that at least once a day. At least once a day would be fantastic if you could do that. On that way, you keep updated on how the market is going. What is your take on US dollar Japanese yen? So US dollar Japanese yen is not on the books, but I'm looking to short that. As I've mentioned, the expectations is that the continuity of the pound, of the US dollar to go lower, affected a lot on this. So I think that if this level gets broken around 146, the Japanese yen could have a lot of momentum, so bullish in a sense, so pushing US dollar Japanese yen down, and we could probably target around 144. You can anticipate yourself from here. That's a pretty good risk reward, or you can just wait and play the breakdown. Can I always use the FinLogic sentiment to hold a long time trade like these ones very often? You can, but as I say, always check. Okay, so there's another update coming now. Let's see. Okay, so Aussie CAD, there's a big change from something like more than 50 to Nats longs to 39. So it's always, it's very, very important that you check that every single day, at least once a day. I'm training myself not to always trade every single day, just a couple of good swing trades at least, or 1 or 2 weeks. Yeah, that's really great. You don't need you need to have quality over quantity. Okay, you don't need quantity. If you have 100 trades and you made like $10, what's the point? But if you have 2 trades and you've made $1,000, much better, right? So it's not about how many trades you do, it's about how good quality the trades you got were, okay? All right, guys, thank you so much for coming over today. I will be back tomorrow from 4 to 5 p.m. and we're going to be looking at the ECB, all right? So how that's going to affect the gold. Usually ECB affects gold, also the euro against the US dollar, and also the pound against US dollar and other currencies. So come and join me tomorrow, same time from 4 to 5 p.m. and hope to see everyone back. Thank you so much. Have a great day or great afternoon, whatever you are, and chat to you tomorrow, guys. Bye-bye.